Hello guys, welcome back. Today is Tuesday. You already know it's the webinar day. So it's 5 to 6 p.m. today. We're gonna be having the webinar and I will be diving very deep on what is actually making euro-dollar go up. Do you know? Do you have a clue why euro-dollar is going up? Not only because the US dollar is going down, but why is actually euro so strong? Because if you don't know, euro was the strongest currency last week. Yes, euro was the strongest currency last week, only losing for the Japanese yen, of course, because of the new positive interest rates policies in Japan. But why and should we enter into a long position on euro dollar? So come with me tonight and ask me all of your questions, okay? Live today from 5 to 6 p.m. How do you get the link is very easy, okay? We don't ask for credit cards, we don't ask for nothing. You just go at the description of the video, click into the link to redirect yourself to the Telegram group, and then in there from 5 to 6, as soon as it hits 5 p.m, I will be sending the link to you. Sydney time, of course. As soon as it hits 5 p.m. on Sydney time, I will be sending the link to you over there. Okay, cool. So yesterday, we had the European CPI year over year for the month of January. So January last year, so 2024, to January this year, 2025. Every time, and I've explained this quite a few times already, but every single data, every single economic data that gets released, you have the period, okay? And that period is a year over year, or maybe a quarter of a quarter, or maybe a monthly, or maybe a month of a month. Okay, it just depends which data you're looking for. So this one, in case, was the CPI year over year for the month of January. So January last year to January this year. The inflation previously from January 2024 to January 2023 was at 2.4%. That's an average, okay? That's an average. So from January 2024 to January 2025, we had the consensus of 2.5%, but the actual came in at 2.5%. So that's pretty good. That's showing to the market that the central bank is being able to control somewhat the inflation. It doesn't mean that they are actually controlling, but they're trying to, and they're doing pretty good. And that is another strengthening power to the euro, okay? Not only that, but this pretty much shows to me that they can continue to cut the interest rates because inflation didn't come not expected in a sense. So they were expecting 2.5% and it came in at 2.5%, so that's pretty good, and they can continue to do the reducing of the monetary policy. They can continue to cut interest rates, in another word. And that, of course, weakens the currency, right? Yes, it does, but not in this case scenario, and you're gonna learn tonight. But very briefly, why does the cut of interest rates doesn't weaken the euro is because the inflation is being controlled, and what the central bank has been saying that inflation is going to be at X amount in X period, on Z period, that the labor market will continue to be stronger and the inflation will continue to fall. People will be able to go and buy groceries normally. That is all happening. So it's confidence, all right? So the central bank is saying something and that is actually happening and people get confident, and that's good. And for this reason, investors are believing on the thesis of the central bank and in buying Europe. So buying Europe in the sense of buying euros and selling US dollars, because euros say it's completely different. The Fed say something, it happens completely the opposite, US dollar goes down. Okay, so tonight again from 5 to 6 p.m. the webinar, it's free, we don't charge you anything, it's live, it's literally real-time thing, and you can ask me any questions you may have. So guys, thank you so much. I hope everyone have a beautiful week ahead, good trades as well, and yeah, always here to help. If you need any questions, if you have any questions, put down in the comments or come up tonight and ask me live. Thank you so much, see you later, bye.